Good evening. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting. From the last 2 to 3 years, I am consistently raising my voice, which is the high leverage in the books of Indian corporates. Whether this is Adani, whether this is Tata Group, whether this is Vodafone, whether this is Airtel and SP Group, and the list is very, very long. If you're thinking the list only ends at 5 corporates, then you are highly mistaken. The list of leveraged corporates in India is very, very long. But the most unfortunate fact is that majority of the leveraged corporates in India are protected by media. Media in the sense that media never reports about their leverage structures. What happened at the end of the day, they bust. Example, infrastructure leasing and financial services. Example, Diwan housing. Example, Yes Bank. When they defaulted, millions of investors lost their hard-earned money. What happens? How many of them compensated by the regulators? Did any compensation received by the investor from the state? Did any compensation received by investor from the regulator? You know the answer. I am shooting this video as of 29th June 2023. And I'm sure by the time this video would be live on YouTube channel, it might be the end of the July. The reason being, time is very limited and the team size is not as big. We have the loss-making startups. In the last 10 to 15 days, one corporate which is in limelight, unfortunately for negative reasons, is SP Group. By SP, I mean Shapoorji Pallonji Group. I went to internet and I checked the total quantum of the debt in the books of SP Group, and the limited information I get is that the total debt is near about 3.1 billion US dollars. I repeat, 3.1 billion US dollars, which effectively means around 25,000 crores if I take the current exchange rate. I repeat, 25,000 crores if I take the current exchange rate. But having said that, I do not say that this $3.5 billion is a right figure. The reason being, there is not enough information we have in the public. In fact, I went to the website of the SP Group, and the last updated annual report they are having is as of 2020, which is financial year 2020, which means financial year 21, financial year 22, and financial year 23. Annual reports are not public. Since they are not public, I cannot comment on the annual report. Henceforth, I am going with the public figure that the total debt in the books of SP Group includes approximately is tantamount to 3.1 billion, which is approximately 25,000 crores. Today, on 29th June 2023, SP Group raised approximately 14,300 crores. I repeat, 14,300 crores. And this is a refinancing debt. Please take a note what I'm saying, refinancing debt. So guys, in financial market, there is a term called financing and there is a term called refinancing. Both are completely different, just like Somalia and Sri Lanka. Probably both starts with S, but Somalia is an independent nation, Sri Lanka is an independent nation, right? Similarly, financing and refinancing are completely different. By financing, we mean either it's a fresh financing or it is additional financing. So I'll go with hypothetical example. I repeat, I go with hypothetical example. Today, if Airtel, who is also a highly leveraged corporate, I repeat, Airtel, who is also a highly leveraged corporate, planning to raise another 10,000 crores, then this is considered as financing, which means whatever debt, which by the way is a huge figure, and I would be making a separate video on this debt plus additional 10,000 crores. What would if Airtel 10,000 crores is getting maturing in August, assuming, like I said, it's a hypothetical example, and they are not in a capacity to pay the 10,000 crores, they are hiring investment bankers or probably already hired, then they would wanted to refinance, which means suppose they have taken this funding from SBI, just all hypothetical example, and now they are hiring another banker, which is say IDBI bank, and they will take the fresh money from the IDBI bank and give to the SBI. This is called refinancing. Remember that one of the significant reasons of refinancing is the quantum of the debt and the corporate inability to honor this debt. Because if you are able to honor the debt, then there is a 99% probability that you will never refinance your debt. You will only refinance provided you do not have the capacity to honor your debt. But the media of India is a great institution. There is hardly any saying in that. They always hide whatever they can hide as maximum as possible. If we speak strictly to SP Group, then according to the public information in the today's newspaper, SP Group has raised 14,300 crores from a clutch of private credit investors. Now, private credit investors is really a very fancy term, to be very honest, because I shot many videos, God willing, and many more I would be shooting. In our financial market, there is hardly any deniable fact that the fancy terms are not in use. Rather, the reality is that majority of the terms which are used are fancy in nature. So private credit investors are nothing but the yet another fancy term. Actually, they are independent high net worth individuals. Let it be very honest. Private credit investors are independent high net worth individuals. So let me give you an example that you are having a big private equity fund, and that private equity fund is having AUM of $5 billion, probably $10 billion, maybe $20 billion. Now the CEO or probably the CFO who is working in this private equity fund from the last 10 years, common sense, they are drawing a handsome salary, the perquisites, the benefits, everything, the bonus, whatever. Over the period of the time, they accumulate a huge amount of money. And maybe their private equity fund, their independent venture capitalist firm will not permit them to take a position in a highly leveraged company, but on an independent note, on a personal note, they can invest their personal money. Now, the fancy term of this is called private credit investors. But Rahul Magan never go with the fancy term. Rahul Magan always go with the fundamental terms. So according to the public information, SP Group has raised 14,300 crores from a clutch of private credit investors and high net worth individuals, pledging its shares in the Tata Sons as collateral, primarily to refinance its debt. Now, that debt which they are refinancing is 14,300 crores. Guys, refinancing is never be a solution of the problem. Because if today, probably after a month or maybe a 2 month, if something is getting matured and you're trying to refinance this, then this definitely never be a solution. The reason being because if you're refinancing, you are just postponing the problem. Like a cricket match, if one batsman is not taking a responsibility to score the runs put up by the opposition on the board, and he is passing this responsibility to the next batsman. Could be opening, could be middle order. In this regard, this is nothing but the refinancing. And unfortunately, the statistics which I am receiving in the public domain, these statistics are very glaring statistics. By glaring statistics, I mean to say it's very difficult for me to digest these statistics. Because according to the public information, the listed non-convertible debentures were fully raised in rupees. It means it's a local currency debt, and promised an enticing yield of 18.75%. Now, first of all, one thing which I would like to teach to Indian business media, although I taught this many times, but I failed. But let me try once again, that whenever non convertible debentures are issued, whether the company is a listed company or whether the company is a non-listed company, whether the company is an Indian company or whether it is a non-Indian company, if you are reporting this in the public domain, then you need to learn that you need to mention the coupon rate. That is very important, because yield is nothing but the coupon divided by MPS. Now, by MPS, I mean the market price per share. In a very technical parlance, this is called the feedback loop. I can't explain what the hell is the feedback loop, but quoting a yield in a public document or a public newspaper is definitely 100% incorrect. You are supposed to quote the coupon, not the yield. But anyways, Indian business media is a great institution and you cannot challenge them. Their knowledge is very vast, but on the negative side. So they are saying that they are having a yield, that NCD, non-convertible debenture, is having a yield of 18.75%. How much is the coupon? I don't know. But for a minute, let me take a simple guess. Since the NCDs are raised today or probably around 2 to 3 days ago, the common sense is coupon equal to yield for the time being. As NCDs will float into the public, people will buy, sell, institutional investors will take position. In this eventuality, the yield and the coupon may differ. The very surprising thing which is hitting me is that, however, what gave investors the comfort was the inclusion of the highly secured asset as collateral. Now, that highly secured is something I cannot digest. And do you know what this highly secured is? It includes 9.2% stake in the Tata Sons. Now, Tata Sons is nothing but the main holding company of the Tata Group, though unlisted. And the fact is not hidden from the globe is that Tata is the most indebted amongst most indebted companies in India. But the media is definitely a great institution. They never highlighted this issue, and I do not expect media to highlight this issue even in the near future also. So this 9.2% stake of Tata Sons, basically SP Group is holding, that is considered as most secure. And I fail to understand what is the definition of most secure. Maybe the media house who published this, they know better. Apart from this 9.2%, the things which are pledged include the shares in Afcon Infrastructure Limited and several of the group port business. The tenure of the NCD is around 2.5 years. I repeat, 2.5 years. Now, I do not know that how much they would be able to make out of this refinancing. Let it be very honest with you, because 18.75% is a very high amount. Let me tell you, it's a very, very high amount. And guys, if you take 14,300 crores and just take a simplistic calculation, then more than 2,000, around 2,700 crores would be the interest cost on the yearly basis. 2,700 crores into 2.5 years, which predominantly is around 7,200 crores, you can say. In fact, more than that. This huge interest cost, which they would end up paying, from where they would be accumulating the money, I really do not know. But the another thing which hits me, that SP Group, which owns about 18.37% in the Tata Sons, they have already pledged half of its stake owned by Sterling Investment Corporation Private Limited, which means around 9.2% stake is already pledged. The rest 9.2% is pledged today. Now, this Sterling Investment Corporation Private Limited is an investment vehicle of the firm. A large portion of the funds raised today will go towards repayment of the debt. Some of the capital raised will also be allocated to the treasury investment, the people cited above. I fail to understand, by having a yield of 19%, what is the meaning of treasury investment. Another thing is that the group has made efforts to monetize asset to reduce the debt by close to 1.4 billion in the past 2 years. It sold some of its businesses, including Eureka Forbes, majority stake in Sterling and Wilson Renewables, and paid back 12,500 crore last year as a one-time resolution without a haircut to the creditors. I don't know what would happen or not, but one thing which is very clear, that the news which is coming, that SP Group raised 14,300 crores at a yield of around 19%. I once again repeat, I do not know the coupon price because this is not in public. This is really a scary news for me. Many corporates in India are accumulating huge debt, including Adani's, including the Tata Group, including the Vodafone, including the Airtel, and including many corporates. Debt is definitely a concern. History is witness that if debt is taken at granted, in the long run, it ends up in a big trouble to that corporate. I would be requesting Indian corporate sector to keep a very strict and vigilant eyes as far as the debt is concerned, because debt is something which is very, very serious. And please do understand that with debt, there is one thing which comes free. It looks free, but it is not free, which is called the downgrade in the credit rating, which is called the finance cost as we speak. No credit rating agencies confirmed whether the rating of SP Group is downgraded or it is intact, upgraded. It's really not possible. But still, to be honest, the news of SP Group is definitely not a conducive news. But still, let the time progress and more information on the cards, because NCDs, non-convertible debentures, are raised only for 2.5 years, which means if today we are in 2023 mid, it means at the end of 2025, these NCDs will mature. And then we will see how SP Group would be refinancing this debt. This is Rahul Magan from Treasury Consulting Group. You knew my personal number, +91 9899 242 978. In case you have any information about our training programs, our consulting, and anything, you please refer our fixed income platform www.fixedincome.global. Let me repeat, www.fixedincome.global. Thank you, ladies and gentlemen.